4 years, you know. I was doing, doing pretty well, and I was following that formula, go to school, get good grades, and because after you get some good grades, then you should get a good job, right? Is the idea. So I did. Verizon, pretty good company. Then I got laid off, and I was like, wait, where's that in the plan, And that's when I started changing my mindset a little bit. So, I got to do something different. But that's kind of how I got involved with my income and this whole idea of personal finances and doing something different. But since that time and now, yeah, my cash flow has increased tremendously. I have a real estate companies in the Metroplex. I have a packaging business as well. And I enjoy teaching this stuff. I used to teach back in the day too. High school physics. I don't know how to put it in there. But I love teaching and seeing that light bulb go off, I enjoy doing that. So this room is for new folks, people who have just got the package, the My Income package, or I know there's some people in the room who have not yet got the package. By the way, show of hands, who has not yet gotten the My Income package? Okay, we have a small. Okay, cool, perfect. Just so you know, at 12:45, I think it is one, we'll be having an actual overview, My Income overview, or presentation in one of these rooms. So if you want to hang out for that, especially if you haven't seen one of those before, then that would be good for you to stick around. And if you have any friends in the area, go ahead and text them to come. All right. Okay, so what we're going to do in this room again is that we're going to start with this whole tax strategy. I like to call it tax planning. We hear about tax preparation all the time. Sorry. We hear about tax preparation all the time. We hear about tax preparation all the time. As a matter of fact, this is the season between January and April. And most people don't do planning. They just do tax prep. And here's how you can test it. If the only time you think about taxes is between January and April, then you haven't done any planning. Right? Right, it's too late. December 31st ended already, right? There's nothing that a tax preparer can do legally to go back and fix the mess you made in the year that already ended. See? So I tell people, wherever we meet you, if it's January, February, March, it don't matter. Let's start putting some plans in place, some steps and strategies in place, so that you can maximize your tax advantages or minimize all the tax advantages legally. See? And that's why I call it tax planning. Businesses do tax planning because they hire sharp people from Harvard and Yale, and so they understand how taxes and finance work. But individuals don't do that. We go to work, we make the cash, and we lose it. For those of you who have seen me present before, I like to start out by drawing a picture of a house on the board, on the whiteboard. And what we do is, if you can picture that house, on the left side of the house, you have just point an arrow into the house. Because that's what you do. You try to bring money into the house. Because you go to work every day. You go to work and bring it in. Nothing to do with that. That has to happen. But we typically forget or ignore the back door, where the money is going out. And I draw 3 arrows coming out of the right side of the house. So picture that in your head. One arrow is taxes. You're losing 30% minimum in taxes. You're going to lose another 20% in interest that you pay on debts, student loans, car payments, all that stuff, right? And then the third arrow is just your expenses, car loans, and all that stuff, right? So what we have to get good at if we're trying to be financially successful is, yes, go ahead and bring money in through the front door. Do that, make that bigger if you can. But we cannot ignore what's going on outside. And sometimes we think it's taxes, so we're scared, it's IRS, it's the government, take it. And we tend to even overpay them because we don't understand, etc. I had a chance to go on the radio here in Dallas for 6 weeks in a row, on one of the local radio stations. And one of the first things I told the Dallas, because this was live, was I don't blame the IRS like how a lot of people, always kind of dogging them out. I said, I blame us because we don't read the tax code. We don't know what's in it. And if we knew what was in it and we used it to our benefit, then we'd be ahead of the game. You see? And lo and behold, there's a lady that used to work for the IRS who was listening, and she called me. And she gave me my, she gave me my little kudos and stuff because she appreciated that I didn't beat up on the IRS, So anyway, so here's a strategy. Let's start out. Hopefully I can figure this out. One just, definitely. But anyway, we figure it out. So we're going to talk about the W-4. So the W-4 form is, if you guys remember, when you got your job, for those of you who have one, in your new hire packet, you would, in your new hire packet, that would include a W-4 form in there. Actually, you guys should have a common tax deduction packet. Do you have one? Yeah, let's see what that one is. Okay, no, you don't have it. You don't have it. It's okay, I'll show you later. Okay, that's fine. So the W-4, try to get it to you here. This is an older one. We're going to update our documents to bring in the 2015 W-4 form. But are you guys familiar with this?
Yes.
Yeah. Okay, so the W-4 form, as it says right here, I know you can't see it. I don't know how to make it bigger here. It says, I'll read it for you. It says the purpose of the form. It says complete form W-4 so your employer can withhold the correct amount of income tax from your pay. It says consider completing a new form each year because your situations may change. Now, some people have been on the job 10 years and they never touch that one. But the IRS is telling me consider filling out a new one. People think this is a dependent worksheet, right? Typically, people put 0 or 1 on this form, and then they hand it into their payroll department. And most times, they don't really read it. They just put whatever they had last job, they just transfer it out to this job. Or they call up mom and say, Mom, what should I put on my W-4 for? And mom says, child, put 0 on that thing. You don't want to mess with the IRS. Now, I do taxes. I've been doing it for a long time. I have clients come in and out. Guess what? Most people put 0 or 1 on their W-4 form. That means that the IRS takes as much as they can. Okay? So you give it to them. And at the end of the year, like this time of the year, we're so in a hurry to get a refund. My thing is, that's not smart. Not financially, not mathematically. Now emotionally, it might feel good to get this fat refund. One guy told me, I got $5,000 back. I told him, that's not good. He's like, why not? Well, look, Uncle Sam kept your money. And most of you know this. Kept your money all year. Didn't pay you one dime in interest. It would be better you took that money and put it in the bank. Let it grow at least, right? And then if at the end of the year you owe, then at least you have the money that did something good for you. Make sense? But we take it a step further. We say take your money and do something constructive with it. Take it now. Don't wait. At the end of the year, shake hands with the IRS. I don't owe you, you don't owe me. That's the right way to have a W-4 form. Make sense?
Yeah.
Yeah. So now let's do what most people really have not done. Let's just read it. That's all we do. Let's just read it. All right. Line A. Keep a mental note. If you don't have a copy of this, which I don't think you guys do, just keep a mental copy. Oh, I have that. Good. Keep a mental note of go down to A1. Let's go back to A1. All right. Keep a mental, maybe just a notch smaller, so I can see the line over here. Yeah, perfect. Everybody can see that?
Yes.
Yeah, next one. All right, so keep a mental check. Enter 1 for yourself. Enter 1 for yourself. So everybody should at least have 4, not 0. Next, enter 1 if you're single and have only 1 job. Or you're married and have 1 job and your spouse does not work. Or your wages of your second job or spouse's wages is less than $1,500. $1,500 or less. So, figure figure it out real quick. If you have one more, put one more. Thanks. By the way, people think this is a dependent worksheet. Did I already say that? It hasn't asked you for dependents yet. Okay, keep going. Enter one for your spouse. Period. You see that little period right there? In Jamaica, we say full stop. It's a British thing, you know. You call it period here. All right, period. So if you have a spouse, enter one for your spouse. But it continues. So that we can take some more money from you, go ahead and you may choose to enter 0. They didn't really say that one. That's what, in effect, that's what's happening. Okay? So you can put one more and see. Some of you have 3 so far. Some of you have 2. Some of you have 1. More than 0, for sure. Let's keep going. D, enter number of dependents. Finally, they ask us for a dependent. It's not a dependent worksheet. Okay? So if you have 2 kids, put 2 kids. 1, 0, whatever. E, y'all following? E, enter 1 if you're head of household. Now, the question is, are you head of household? Well, people say, well, I'm the head of my house, so I'm the head of household. Well, according to the IRS, let's just go read it. Remember, that's all we're going to do today. We're just going to read the code. You see, I like to go directly to the IRS documents and read it. It's right here. Head of household. Generally, you can claim head of household filing status if you are unmarried. That's one. But you see the word and, you pay 50% or more in the upkeep of a dependent. So you have to be unmarried and have a dependent. A kid, a grandmother, something, okay? Someone. So now you can tell if you're head of household or not. Alright, so if you are, then go ahead and enter. Where are we? Thank you. E, F. You just finished E. F. Enter 1 if you have at least 2,000 in child dependent care. So you put your kid in daycare and you have over $2,000 for the year. So enter 1 if that's the case. Who has more than 4 so far? Okay. All right. G, child tax credit. It says if your total income will be less than $65,000 or $95,000 if you're married, enter 2 for each eligible child. So if you have 2 kids, and an eligible child would be a child who in the tax year is no more than 16. So that's how you can tell if you have an eligible child. In that tax year, the child has to be no more than 16. Okay. 2 for each child. Okay. So 2 kids, that's 4. But if your income is less than, where am I? If your income is between 65 and 84, then just enter 1 for each child. Got it? All right. So that's another thing. Next one says what? Add them all up. Add them all up. All right. Now this is interesting. What kind of numbers do you guys get? Shout it out for me. 5, 3,
7,
15,
6.
15. Who said 15? Really? On the first page? Wow. Exactly. Guys, you can put between 0 and 99 on this form. I told somebody that they said, 99 kids? It's not a dependent worksheet. Many things affect this form. It's a very powerful form if you use it right. I've used this form to help people to bring home an extra $500, $600, even $1,000 per month immediately. I show them how to change the form correctly. We apply a tax strategy. They take it into their payroll department Monday morning, and as long as they hit payroll before they run it, they'll see an increase in their paycheck. Now, the question that you're thinking probably is, well, am I going to hold? And that's why we have the rest of the strategy, the other side of the strategy, so that you don't. Because what we're going to show you next is how to reduce your taxable income in the first place, so that you can afford to get this money up front. That's what we're doing. We're balancing it out. See? Because some people, you know, will go and they will adjust their W-4 form because they need the money, but they don't have any other thing, no other strategy. So guess what they have to do? Halfway in the year, they have to hurry up and put it back. Or they run the risk of owing big time. Makes sense, right? We know this because we've been around, we've been working for a while. If we haven't done this, we know somebody who's done that, right? What we say is, let's get this thing adjusted the correct way and leave it. Okay, important piece here is that this has 2 pages. Some people have never seen the second page of a W-4 form. Matter of fact, the W-4 form is really just here, just this part. One guy told me he only got half page in his employment packet, his new hire packet, and they cut it because they know he's not going to read the instructions. They just cut it so that they could save money on printing paper. And they put a couple of sheets on the one 8.5 by 11 page. They print it, and then they cut it, and they hand it out to the employees. So they didn't even get a chance to read it. They know they're not going to read it. So it's crazy what happens out there. All right, so it says, let's turn to the second page if you want to know. If you want to claim adjustments to your income, or you want to, if you want to claim adjustments to your income, or you want to reduce your withholding. Well, yeah, I want to reduce my withholding. I want to get them out of my pocket. So let's go to page 2. Page 2. What's the page 2 before? Page 2. All right. This box right here is what we're going to focus on today. This box it has the potential to give you another 5, 10 more points, in addition to the 5, the 4, the 3, the 15, or whatever you have already. You understand? Now watch this. First section. Enter an estimate of your 2014 itemized deductions. You know what itemized deductions are? Who does taxes in here? You do taxes? Okay. Cool. So itemized deductions, that's where you would have things like, if you have a home that you're paying for, you'd have your interest. You deduct your interest and your property taxes and charitable contributions, and insurance. Even medical, yes, that's what I'm looking for. Medical. All right. So if you take most people in this country, this won't qualify. You won't qualify for this because most people are not buying up. Most people are renting. So the biggest thing on the Schedule A or itemized form is what? The interest on your mortgage payment. Exactly. So if you don't have a mortgage interest, then typically you're not going to qualify for that. As a matter of fact, some people tell me, "Oh, I got my charitable contribution." There's one seat up there. Is that seat available?
Excuse me. Any of your members that are here that have a quick start packet, can we pass them over to the end of your rows because those are for the other room? So on the front of the back page it says quick start packet.
Yeah, they're probably starting over there.
Yeah. And he won't speak on this stuff.
And we can get your copy of this later on too,
right,
guys.
Right.
So
that's good. I think this will be fine.
Yeah.
Thank you.
Thanks, guys. For those who just gave it up, we can get it on. All right. How's it going, Alice?
Pretty good.
I think there's one seat back there. Is there a seat available at the back?
I don't know. She kept coming back.
Okay.
She knows.
Okay, so let's carry on. I was going to make a point here.
The interest on the house.
Right. But okay, yeah, so some people will tell you, I've had some clients that will come into me and will say, like brand new clients, and they say, last year, my tax preparer deducted my medical expenses. And I said, okay, cool, let's see what you have. Well, medical expenses has to be really high before you actually qualify for it. It's gone up to 10% of your income. You'd have to be really, really sick, or you spend a lot of money in that hospital for you to qualify for that. But typically, the tax preparers don't really tell people that. They give them, their customers come in and they give them all their documents, and they leave believing that it was deduction because we know it's a deductible item, but most times they don't qualify for it. Same thing with, if you go to church and you give a lot of tithes and offerings. You notice here, this is deductible. This is deductible. It is. But most people don't qualify for it, and they don't even realize it. Because again, they go to their tax preparer and they give them their documents, including the little note that you get from your church, saying how much you actually paid last year. But if you don't have a Schedule A form, if you don't have a house, as you typically you won't qualify for it. See? So these are the type of things that I try to help people understand as they come through the office. So you want to pay attention to that. So let's go just with this. The best way to treat this, by the way, is look at your last year's return. If you can remember what it looked like, whatever you had on your Schedule C form, I would just grab that number right here. So anybody have a calculator handy? I'm gonna do a little math here. So somebody help me out. Just one of the members, just get a calculator handy for me so we can do some math. I'm just gonna do an example of this to show you what it would look like. Okay? Alright. So let's say you are somebody who has a house and you're paying interest, etc. Okay, let's run that example. Okay, boom. Go ahead and put down, so first one with the calculator, write this number down for me on a piece of paper. I don't have a whiteboard up here. Write down, what's a good itemized number? Let's say 13,000. Write 13,000 on line 1. If you're doing this on your own, if you want to do this by on your, as it relates to you, if you don't have a house and you don't do this normally, just put 0 on line 1. So on your page, you can just write line 1, guys, just put 0. And I'm going to show you what happens. Make sense? Nobody confused y'all. Good. By the way, some people tell me that they can't understand when I talk, so my accent is too strong. If that ever happens, just stop me. I don't feel bad. I have to repeat. Next. 13,000. Next slide, down here. Based on your filing status, pick the one that relates to you. So if you're married, put 12. If you're head of household, put 9. 12,400, put 9,100, and put 6,200. This is your standard deduction number. So when you're doing taxes, the IRS will give you a deduction, a standard deduction. Everybody in this country will get one, automatic. But if your itemized deduction is bigger than the standard deduction, then guess what? It's best to take the itemized deduction because you want the biggest deduction you can get. So this is what we're comparing. And you're going to see that line 3 is going to say subtracted to see what really the difference is. Now, this is old. This is from 2014. This is going to go up by about $100, I think. But for now, just put it like that. Okay? I just want to give you that disclaimer.
It's 200.
It's 200 now? Mm-hmm. It went up by 200.
It's okay, you have
6,200 right now?
Oh, I'm sorry. 100.
100, right.
Okay.
So
I was going to the first number up there.
Oh, I see. So it would be what, 6,300, right?
Yes.
Right. It normally goes up around $100 a year. Oh. Thank you. Appreciate you. All right. Everybody with me? All right. Line 3. Subtract 2 from 1. So the one who is helping me out, who's helping me? Who's got that? Thank you. So you should have 13,000, and you're gonna minus. Let's do head of household. Okay. Let's do a head of household person. So maybe this person owns a house and they have a child. Okay?
3,900.
So on line 3 you have what?
39.
3,900. Thank you. 3,900. For those doing your own math, you give you about 15 seconds to do your calculation. Okay, by the way, sometimes this confuses people because if you have 0 here, let's say you don't have a house. If you have 0 here, and then you put, let's say 6,200 here, and then it says subtract 2 from 1, then like, wait a second, is that 0? Where's that? Well, it says subtract this number from that number. It always confuses people for some reason. So if that's the case, you're going to end up with 0. Because that's a negative number if you try to do that math, right? And what did they say? It was 0 or less. Put 0. So you're going to end back with 0. Okay? All right. Where are we at? 4. Are we at 4? All right. 4 says, enter an estimate of your adjustments to income. Now, here's where the idea of becoming a business owner will help you. Most people who just have jobs only, line 4 is not going to help them really, generally speaking. But for us who have businesses, line 4 You know that the idea is that you're going to take the business tax deductions. You understand that, right? That's huge. And let me just refresh your mind a little bit. I'm sorry I don't have a board up here, but if your income is about $60,000, let's just say that's your gross income from your job. Uncle Sam is going to come in and he's going to give you the standard deduction and the exemptions, and he's done with you. Okay? Yeah, you're going to get some credit here and there, but just as far as deductions are concerned, the IRS will give you a set number to deduct. Make sense? When you do that math, what's left is called your what? Taxable income. So far, so good? You're done. On that taxable income, you're going to now look at the tax tables to figure out what your tax should be based on that income. Okay? Then, that's what you pay. Let's say that number is $10,000. Well, what they'll do is they'll take out some from your paycheck, each paycheck, so that you don't have to pay the whole $10,000 at once. If you pay more than $10,000, they give you a refund. If you pay less than $10,000, then you owe. Simple, right? That's tax preparation. Done. If you're not in business, that's what it looks like. We tell people get in business like yesterday, and then we give them a my econ package. Why? One of the main reasons from a tax advantage standpoint is that now that person who's making $60,000 on their job would be able to deduct $25,000, $30,000 in business expenses. People say, well, that's a lot of money to deduct in business expenses. Well, I'm going to ask you a question. If you're making $60,000, let's say you're, head of household or single, whatever, is it fair to say that you're going to spend $30,000 on some stuff? Travel, gas, food, light,
Cell phone.
stuff. Am I right? It's good. I mean, it's all gone by the time the year is done, so you spend it on something. You see my point? Now, what we have to get good at is learning how to convert some of these monies you're already spending, the $30,000, convert those to business expenses. Now, here's what I've done for the last 12 years. I made my income from my job. Then for example, I look at an expense like this, right? Cell phone, we all got one. Whatever this is, I don't know, $1,200 for a year or whatever. I deduct 80% of this. Before I was in business, guess what this was? Just a cell phone that I paid 100%. But now the government says every dollar that you can tie to a business expense, legitimate business expense, you don't have to pay a tax on that dollar. That's what's happening. So what we're pretty good at in my econ is teaching folks how to now do business as you live your life, just do business, and convert those expenses to business expenses. You understand? So this week, I'll tell you right now, my phone's been blowing up because we had this meeting going on, and we're planning, and I have guests all over Dallas figuring out, hey, where to come. And I'm talking business on my phone. But yeah, my wife calls me too, and I say, hey, how's it going? That's personal, right? But guess what? Business expense. I'm trying to show you where that $30,000 is going to come from. Y'all get it? Yeah. You drive your car. This year, the government will give you 57 cents for every mile you drive your car. It's gone up. Every year it goes up. People who are in business get that. If you're not in business, here's what you're doing. Every 2 miles you drive to work, roll your window down, take $1, throw it out window. Drive another 2 miles, take it out, throw it out window. Every day. That's literally what you're doing. And for Marilyn right here, who's in business, she'll come up and she'll pick it up every day because she's in business. The government pays her for going to and from if she conducts business. It's really easy. I love my econ because, everywhere we go, everybody in this country pays taxes, right? Or they should. So when I go somewhere, I say, Larry, how's it going? It's a good meeting. If you know anybody who want to reduce your taxes, get out of debt, start investing, have them give me a call. Now, that activity was business related, was it not?
Yes.
All day long. Now I can deduct my miles that I drove to this spot. If it's 50 miles, I'm going to deduct it, I guarantee you. We have a tax record keeping software that helps track that stuff. We'll get to it, I'll show you. So it makes it really easy. We took the difficulty out of this stuff, right? 57 cents is what I've gotten for every mile. It doesn't even cost you 57 cents to drive your car a mile. Does it? Unless your car is just a clunker and it's just sucking gas and burning oil and all that, it's not going to cost you that much to drive 50 to drive a mile. So the government is really being liberal, you know, giving out some money if you're in business. If you're not, you get squat, as they say out here. All right. I hope I'm making sense. Good. Now, let's bring it back to here. I'm sorry, I kind of went over here just to explain that. I'm trying to explain what's going to cause your income to adjust. See, that 30,000 is what's going to cause your income to adjust. Because we're going to now subtract it. We're going to treat it like a tax deduction, which it is. And it's going to cause your income to adjust even lower. Make sense? So now, guess what you have? You have a lower amount of taxable income. But that's not the only thing you have. Your tax bracket now slid to the lower end. See? Y'all know that there's something called a tax bracket, right? So it's between 0 and 39.6%. So the more money you make, you slide to the higher end. So those Dallas Cowboys players who you know, bringing it in, those guys are closer to the 39% tax. You know, guys on the other end, you know, not making a whole lot of money, you know, they're going to be close to 10%. So if you just reduced your income by 30,000, guess what you did? Two things. Again, the amount you get taxed on is lower, and your tax bracket is also lower. Two positive things. So go ahead and put in, $25 grand, $25,000 on line 4. And where am I getting that? Again, it's no magic number. It's just, I'm just looking at it, somebody making an income of 60,000, you know, surely they can deduct 25,000 if they really focus on record keeping. Okay, it's not going to fall in your lap. You got to do some work. You got to keep records. You know, you don't want to show up at the end of the year to your tax preparer and he says, you say, I'm in business for myself all year, and he says, okay, where are your records? And you say, well, I don't know. Then legally he can't give you anything. You got to keep records. So that's why we have software to help you do that. Cool. But if you can't do that, go ahead and put 25 on this line and be aggressive. Come to training. Go get on the webinars because we teach you the strategy. What we're doing, what we do in the overview meetings that you guys may have gone to is just an overview. When you come to these things, we actually get down and show you how to get it done, which we're gonna do some more of that. All right, I gotta speed it up. So where are we at now? Line 5. Line 5 says add 3 and 4.
28.9.
28.9. Very good. Line 6. Enter an estimate of your non-wage income. So people who have stocks and bonds and dividends and all that kind of stuff will typically put money there. But guess what? You know, most people not investing a lot, so let's skip that for now. If you have some, put some. All right, just for example, we keep going. Where are we at? Help me out. 7? Subtract 6 from 5. Oh, 6 was, 5 was 0.
28.9.
Yeah, so that number is going to carry on.
Okay.
28.9, right? 28.9.
28,009.
28,900. Okay, okay. Thank you. Sorry. All right. We're at.
So do you have some business income as well, right?
Business income?
Yes.
So business income, we will put it. No. We don't put business income on this. We're not going to put the actual income. What we're putting here is the IRS is saying, we know that you're in business, and we know that you're going to have $25,000 or so of tax deduction. So we're not going to take all that money from you in your withholding. This is what we're trying to figure out. We're trying to figure out how much should we withhold from your paycheck. You see what I'm saying?
Yeah.
Because really what they're trying to do is balance it out so they don't take too much from your paycheck. Yes, it's just estimate. So we're not going to put the income on this. Good question. So divide the amount on line 7 by 3950. So take line 7, put that number in, divide it by 3950. This number actually, by the way, for those who are curious, is what they give you as what they call exemption. This actually goes up too every year. And it's probably going to be 4,000 or something this year.
It is 4,000.
It's 4,000. Okay, cool. So divide that number over there. divide that, whatever that thousands was by 39. You got it? What you got?
7.32.
7.32, but they said to drop the fraction, so just 7.
Okay.
Perfect. You notice it's not a dollar amount anymore. It's just a number now, right? All right, so put 7. Then line 9. Line 9 says, enter the number from your personal allowance worksheet, page 1. That number that you all just shouted out at me, that's the number you should enter there. Now, let's see what the scenario would look like. Head of household, the kid, 1, 2, 3, 4, 5. So put 5 there. On that. Because that's what that person, in this scenario, that's what that person would be. 5 or 6, something like that. All right, ready? Line 10. It says add 8 and 9. Add 8 and 9. For those of you doing on the side, how much is that for you? Everybody else was doing it on by the time?
11.
11. 12. 12. Then what did the IRS tell you next? They say, stop here and enter this total on line 5, page 1, which is back on the other page where you would normally put 0 or 1. That's where you put 12 or 14. Yes?
Back to from H when you said that as a head of household person would be, because mine came up on the front was 7. Why did you say between, it may be between 5 or 6?
Wait a second. You said H?
Yes, H on the first sheet. When we're going to bring that number from H on the first sheet to number 9 on the second sheet. Why did you say it's be between 5 and 6 instead of, I came up with 7?
Oh, as a head of household?
Mm-hmm.
Okay, 1 child?
Yes.
Okay. Well, I was just guessing.
Okay.
So it would be more.
Okay.
I was actually trying to do the ABC thing in my head.
All right, thank you. All right.
Good question.
So mine is 12.
You pay attention. I was testing you. All right, where we at? Oh, so we're back here. So this is what people do now. I mean, this is what you want to do now. You want to take that number and drop it right there. The highest I've seen is about 87.
Wow.
Wow. Yeah, I literally see 87. And it was done correctly. Because your income affects this too. The amount of money you have, the amount of the itemized deduction, all that stuff affects this one. Make sense? Powerful form. Now, I'm not going to take time to do it, but there's a form right now. There's a document called Publication 15. You can go to the irs.gov anytime. Publication 15. That document will tell you now how much your employer is taking out your paycheck based on the number you put on this form. And you'll see it has all of the pay periods or whatever. You have single, people get, okay, so you have single, you get paid bi-weekly. You have single, you get paid monthly. You have married, you get, all of the categories are in this book. Your employer has a copy of it. More than likely, electronic, but they have a copy. And if you tell them 0 right here, they look at your status, if you're single and you get paid bi-weekly, they look at what your pay is. There's a column on the left that shows you, if I have time, I'll show it to you. But it shows you how much you make, gross. And then if you go across the top, it shows you the amount that you put on your form. 0, 1, 2, 3, 4, 5, 6, 7, 10, all the way across. And then you go down the line and it shows at 0 and $2,000 monthly or whatever, I will take out $300. If you slide it to 10 or 11 or whatever you guys just got, then I'll take out $20. That's how, if you change it, you get a big fat pay increase immediately. Question? All right, we'll be here all day, so if you think of something, just ask me. Okay, so that's humongous. Humongous. All right, so now let's look at, I'm familiar with this form here. Question, yes sir. Yes.
Can your employer tell you that your number's too high? Because I've had an employer do that.
Yes, they can tell you for sure, but it's none of your business really. Because what if you had 10 kids? They might look at you and say, you don't have 10 kids. Come on, change that. Nobody has 10 kids anymore. Excuse me. right? Now, I literally had, this is a good question, because I literally had one of my business partners call me one day. She was at work, and she said, my HR department is trying to tell me that I can't put 13 on my form. Can you talk to her for me? And she was right there beside her, so she put her on the phone. And then I said, well, ma'am, it's not really a worksheet, because that's what she was thinking. It's amazing how much HR knows about this. You'd be amazed. Because that's another thing. I tell people, look, let's just read what the IRS says. Let's just read stuff. Let's stop listening to what people think and their opinions. Just go to the source. But good question. I had to kind of explain to her, and then she's like, okay, whatever. And so she changed it. You can change it anytime you want. You can change it Monday morning, and then change it Friday back to whatever you want. It's your form. As a matter of fact, this doesn't get reported to the IRS unless it's over 11. Your employer holds this form in their files because it's called an employer withholding certificate is what it really is. And the only reason why they report it to the IRS, by law they have to, I think it's 11 or 12. If it's over 11 or 12. It's nothing wrong with that. They just have that rule in place because they want to, the IRS may call you depending on what you put on there and depending on your track record because they have all your taxes for years and years. And if you normally owe or whatever, they look at all that and they may decide to call you and say, we got your W-4 form from your employer and we saw 20 on it, or 22. Just want to make sure that you understand what's going on because you may owe, based on your track record, you kept owing. So we just want to know that nobody held a gun to your head and say, hey, put 22. That's all it is. If at the end of that call, a matter of fact, there's a case where, I think there was a case where they told one person that they had to. I don't know how that works, but they told them that they had to change it back to whatever. But because of their history.
I know how that works. That happened to me.
Okay.
I had my withholdings really high, and something happened that I owed the IRS. And so the IRS informed my employer not to allow me to take the number back up that high.
Exactly.
So but then after about a year, as long as I justified it, it went back up.
Exactly. So it depends on your history and all that kind of stuff. Make sense? So it's your form. You do whatever you want with it. Look, the whole idea. Let me back it up a little. What we do in my econ is we have a holistic approach to finances. To personal finance. Sometimes we think, let me repair my credit. You hear people say, I'm going to repair my credit, so so that will help me. Well, it's going to help you to get some debt. You see? No, I'm not saying it's bad. You want to get your credit as best as you can. So don't miss the point I'm saying. But that's just one part. Let's understand how taxes work. Because you lose a lot of money unnecessarily if your tax situation is messed up. That's one. One second. I'll come to you in a second. Then debt is another thing, right? We have a lot of debt, so let's talk about that too. Then income, that's another thing, right? Let's talk about that too. And investing, that's a huge thing. Expenses, a huge thing. So we have a holistic approach to this. Yeah, question at the back here. Question?
Yes, back to what she experiment. How can IRS take our right in telling us how many allowances if we're able to justify it? Even though she owed, shouldn't they have provided something where she could make a payment plan to take care of paying those taxes?
Right, and that's a separate thing. They typically do that. They typically make a payment arrangements, etc. over here. But that's probably even a total different department too. And sometimes, these persons are not talking. It happens all the time. They don't know what these people are doing.
Right.
That's one other area too. But
right. But even if that is the case, you're still violating this person's right to say you need to lower your allowances.
Right.
Because now they're putting fear in us.
Right.
Like, oh, okay, I'll do it. But look at all the money she's leaving on the table.
Right. And that's true. I mean, there's probably something in the code that I don't know. The tax code is 60,000 pages thick.
I know, but I mean,
So
it's
there may
not
be
like
something
they're trying
there.
to at least challenge and ask
Right,
questions.
exactly. That's true. That's true. And I would
Yeah,
do that. I mean, if it's worth it to you, you know.
definitely.
Because you can spend a lot of time with the IRS
I know.
on the phone and all that. So if it's worth it to you, then, you know, you can challenge that stuff. But I agree. You know, people look at the tax code and they get scared of it. And some people will say, you know, it's by design, you know, make it complicated so we don't understand it. I don't know. But, you know, but I get your point, you know.
Yeah, thank you.
Yeah.
Some people may ask the question, do I have to have earned income tied into writing off business expenses?
Right.
Can you talk about that a little bit?
Earned income, well, if you, let's say you are retired, okay, and you know you get money from Social Security or whatever. Well, typically you won't have a W-4 form for sure, and there's some restrictions in place where if you make too much money outside of your Social Security check, then you can probably owe some money, right? Because typically they're not going to tax you again on your Social Security check.
But that only goes up to a certain age. After that, you can make a decision.
Right. So there's some restrictions in there, and there's some rules around it. But for earned income,
Well, let's say, for example,
you'd still be able to do deductions if you have legitimate expenses.
no, I mean, some people, I think they think in their mind, well, I'm just starting this new business, my income, right? And I haven't, you know, I may make a minimum amount of profit over the course of the year. So then I write off $15,000 worth of
Right. Got you. I see. So earned income from the business itself. Yeah, exactly. And that's what we're going to go to next. So that's actually a good segue. I'm going to go and show you some scenarios where that's true. All right. Schedule C examples. You know what? Let me go back up and let's get all right, what I'm going to do here is I'm going to answer your question, but let me go through this. I just want to answer that question. All right. This is your 1040 form. Everybody does one of these every year. You know, you put your name, last name, all that good stuff. First your personal information. Social Security over here. If you have spouse, you put your spouse name, etc. Filing status right here. If you're single, you check that box. Head of household over here. If you have some dependents, you go ahead and put them here, right? Kids, etc. And you'll have your total number of exemptions right here. So you remember that number on the W-4 that was 3950 that you divided? Remember that 3950? That's actually the exemption. So what they'll do is they'll say whatever number comes here, you multiply it by 3950. And that's the amount you're going to get in deduction for exemption. So that's why people say if I can claim this kid, then it makes my deduction bigger because that's what's happening. This kid, and this kid makes it 3, 4, which is yourself, multiplied by 3950, right? So I'm just trying to tie that back to you. All right, next section. So that's just, your personal stuff. Next section. Here is your income section here. Wages. So on your job, you would have your job number right here. And, I'm not going to give a line, but, I'm just going to what's typical. Your job income here. Right here, if you notice, it says business income. See, that's where we typically get that business income that you're asking about. You actually put there. Actually, you put the net. You put the net of expenses, income minus expenses, and you put the net there, okay? Yeah, you put, on the Schedule C form, which I'm going to show you next, that's where you figure out what's the actual net. So take your income that you made, take your expenses, subtract it, and that net is what you bring over to this line. But I'm going to show you that form right now. It will make sense in a second. Unemployment income, you know, you put it here, and it acts as, you know, you add it all up, income. Pretty straightforward. Any kind of adjustments, you know, healthcare expenses, like if you're a teacher and you pay for kids' pencils and stuff, you put it there, and stocking different things. I won't go through every single one. This one is a big one, I'll show you that later. Any kind of tuition costs, you know, the standard adjustments. You may have some of this or you may not, right? Then, remember I was talking to you about the itemized deduction? And I said most people who have a house will be able to use this form, remember?
Yeah.
This is the form right here. This form attaches to the one I just showed you, to the 1040. But most people don't have this form. That's what I'm trying to tell you. Because look very carefully. Here, it says medical expenses. You have to have a lot of medical expenses to get it. 10%. That's a lot. Most people, most of my clients that come through, I've probably seen one time. Maybe twice. But somebody really got this. What is deductible? Taxes. So this section is, you know, if you pay property taxes, you know, on your house, you put it there. You can, sales tax, you can deduct some of your sales tax, you know, and that's 8 1/4, something like that. Interest that you pay on your house, mortgage, that's that section. Here's where you put your charitable contributions, remember? So if you're not using this form, you don't know where to put it. And most people don't have this form. Okay. All right. So, job expenses right here. Job expenses. So if you're at work, if your boss tells you, hey, go drive down the street and pick up some supplies in your own car, then you can claim some of that stuff here. But if that's all you have, then it might not be enough for you to use this form, right? So all of that stuff should add up to more than your standard deductions, what I was telling you earlier, for it to make sense to use this form. But anyway, I just wanted to show you the form. This form now, the number at the bottom here, total, will go back onto your 1040 form. All right, so now let's go look at some scenarios with people in business making income and the ones who are not making income. So Schedule C, business owners qualify for hundreds of deductions that employees cannot receive. If you own a business, you can use the Schedule C, whether you are standard or itemized filer. These deductions are to be filed on tax form Schedule C and reported on individual standard or itemized filers 1040 line 12, which I showed you before. So let's look at the form. You're the designated button clicker for me there, and that comes up. Thank you. All right, so now this is a scenario filled out. The other sheet was blank. This is an example of an employee with no home-based business. Okay? Now let's look at it. It's Joseph work, Mary, the wife, address, social security numbers, they're married, they got one kid, and see, their total exemptions is 3. Okay? Joseph works for AT&T Wireless, he makes $75,000, so we put it in. He has nothing else, which is, you know, average. Average person, this is what's going to look like. What did I do? It's probably, all right, thank you. So typically that's what it looks like. That number carries down to here. You notice there's nothing on line 12. Let's keep going. No adjustments. So that number is actually your, what they call your adjusted gross income. You've heard of AGI? That's what it is. That number carries to the second page of the 1040 form. Okay? 1040 form, second page. There it is. Here's where the deduction is going to start coming in. Okay, Sam now comes and they give you itemized deduction or standard deduction, whichever is bigger. Remember that itemized deduction form? Whichever is bigger. Now let's look at which one did they get? Standard or itemized? Standard. How do you know? Right over here. See right here? because they're married. If they had gotten their itemized, then that number would have been bigger, right? Okay, cool. So then now they're gonna subtract these two. What's left? 62? Line 42 is the exemptions. Remember where the exemptions come from? It's number 3 from the front page, because it's 3 of them on the tax sheet, multiplied by 3,900 or 3,950 or whatever.